Hello and welcome to another edition of the CGSP Roundtable. This is where we get all of our editors together every week to talk about sometimes the top stories of the week, but in the case of today, Geraud and I are going to try and figure out what the F is going on with battery metals and critical resources. Geraud joins me, as always, from the beautiful island of Mauritius. Geraud, a very good afternoon to you.
Good afternoon, Eric. It's really a pleasure to be here again for this roundtable.
It's going to be a lot of fun today. And for those of you not familiar with Geraud, he is our Africa editor. He also oversees all of our French language services. And he is one of the world's foremost experts in cobalt, lithium, nickel, battery metals, things that are coming out of the ground and making all of those beautiful EVs in California, New York, London, Brussels, and Norway drive. And so we're going to talk a lot about that. And Geraud, today it's really interesting because this all kind of started because you and I over the past few months have been seeing some really weird trends that have been going on. And I have been trying to string together a few things. And that's really what I want to try and do today is kind of just air everything out. I don't think anybody has the answers to everything. There's some strange things that have been going on. I think you'll agree with that in terms of counter-cyclical actions by Chinese mining companies. Don't get into too much details because I'm going to walk everybody through it, but just give us kind of the overview of where we are today in the battery metal market and what the Chinese are doing.
So in the EV battery markets today, what do you have in terms of critical minerals? Like we've been noticing a slump of prices over the last year and a half, basically. The price of cobalt, the price of nickel, lithium, and all critical minerals prices have been dropping off drastically. The drop, of course, many major companies to cut off production. A company like Glencore in DRC as last year was planning to cut off its cobalt production. In terms of nickel as well, many companies in Europe, in Latin America, also in Southeast Asia was planning to do the same. Lithium also prompted some Australian company to cut off their operation in Australia, slowing down their expansion in the US. That's even the low prices has also prompted some US company to stop the lithium processing they were planning to open up into the US, same with cobalt. So that was happening generally into the market. But despite that situation where you'd assume that every major mining company, any miners working in that space would also follow the trend of cutting off production to reduce the glut in the market so the price can go up again. What we see with Chinese is counterintuitive. They keep on producing. They're not slowing down. They're really expressing the willingness to keep on producing. We were even expecting to see some Chinese lithium operation in China to reduce their operation. They did not. They're not expecting to reduce. They're not planning to reduce their production. CMOC in DRC, the one producing now the largest cobalt producer in the world, also has no intention at all to reduce its production. So basically, this is what's happening in short in the global battery metal market.
Let me walk everybody through. Okay, so Geraud has kind of mapped it all out. What's weird about this moment that we're in? Because normally what we see in times like this, especially in other commodities like oil, is that when prices are low, they'll take supply off the market. Prices go up, everybody's happy again, except the consumer. Let me show you a couple things that are going on this week because we want to kind of set this conversation up. And then we're also going to bring in Antonia Timmerman, who is our editor in Southeast Asia, based in Jakarta. She follows the nickel sector there very closely. And at the end of our show, we've got a real treat for you to show a Chinese EV that is kind of taking off in Kenya. And Njenga Hakeenah, our Africa climate editor, is going to join us from Nairobi to talk about that. But let me tell you about what happened earlier this week and in Beijing. And there was something absolutely incredible that happened. And let me just show you about Xiaomi and the SU7. Okay, these pre-orders took off. I mean, it's just absolutely incredible. And you'll see the pictures here of this car. It is it's really a spectacular car. It looks suspiciously like a Porsche. So the design, I think it's typical
At
It's
some point,
typical Xiaomi,
we should be accustomed to the point that when it comes
but
to certain car, Chinese have the tendency to kind of copycat in a certain way.
well, certain parts of it.
Yes,
Certain parts of
yes.
it, but this
Yeah.
car is badass in so many ways.
Oh yes, true.
I mean, this thing is only $30,000 to $40,000. It has an 850-kilometer range on it. It can operate in 12 degrees centigrade weather. I mean, there are so many features on this, and it shows that Xiaomi, a phone and electronics company, was able to do things that Apple couldn't do. And once again, I think what we're seeing is that the Chinese are moving way ahead in EV production. However, Geraud, and as exciting as this is, okay, and again, the pre-orders for this thing are off the chain. 90,000 came in the first 24 hours, but it is not going to be enough to help, even though this one car added $4 billion of market cap to Xiaomi just in a certain time. But the reason why we're talking about Xiaomi is because they're trying to give a boost to an EV market in China that is in the doldrums. And it's a very similar situation of what we're seeing in the US as well. But there's a lot of saturation in China, and all of this downstream is impacting the battery metal prices. So we're, again, the point of kind of laying this out is we're going to get to the battery metal prices. But we got a problem in China right now where demand for EVs is not as high anymore. Some of the subsidies that the cities were providing to consumers, the consumer end subsidies, have come to an end. There are some quality problems, and there's a little bit of concern right now that as the prices for Chinese EVs go down, that some of the quality is also going to go down, and that's going to frustrate some users. Now, it's a very similar story over in the United States. So the United States, in many ways, got started much later than China, has much less diversity in the market in terms of range. They don't have products like the Xiaomi at 30,000. Tesla sales this week just announced that they dropped for the first time. So that is something that people are keeping an eye on. But you see this chart that's very revealing. And all of this has to do with this keys to demand and supply for battery metals. So, Geraud, we're seeing softness on the demand side. At the same time, there is this sense, even in the US, where there is not a lot of enthusiasm for EVs, that it's still going to be the transportation of the future. And the goal is to try and set up this EV battery metal supply chain that is clean and clear and independent of China. And so, Geraud, I'd like to get your take on a couple of deals that took place this week. So, and this involves your country in the Democratic Republic of Congo. So we saw one deal between a Canadian cobalt processing company called Electra Battery with Eurasian Resources. Okay, tell us who Eurasian Resources is and why are they important?
Eurasian Resources is a part of the group that we call ERG Group. ERG is a Kazakh company. It has 40% of Kazakh government stake on it, but it's registered to Luxembourg. But it's really much more have a Kazakh capital into it. So they have a huge operation into the DRC where they produce cobalt and copper. They've been expanding their operation in the DRC for quite some time now. Last year, in 2022, they were the third largest cobalt producer in the DRC. In 2023, the trend kept on going. So they're quite now, even in the DRC, they're quite having a bit of difficult time with the Congolese government right now, with Jekamin as well. But overall, the operation is going quite well. They're really a major producer of cobalt in the DRC.
So they're part of, so they're part of the solution for G7 countries like Canada, Japan, the United States, the UK, and other European countries that say we don't want to depend on the Chinese mineral supply chain. And so they're part of the solutions. That's how we should understand that, right?
Yes, they are part of the solution. Since it's not a Chinese, it's not a Chinese capital company. It's a completely non-Chinese operation, so they can still count on a company like ERG. If you want to source yourself with cobalt from the DRC, companies like the ERG, you can really count on them.
Okay. Well, let's take a look at another deal that happened this week, and that is Glencore and Evolution signed a letter of intent. So it's not a formal deal yet,
Yeah.
but to supply cobalt to this massive new cobalt processing facility that's going to be built in Yuma, Arizona, in the southwest of the United States. When this thing is up and running, they say it will be able to process up to 20 to 40% of the U.S. cobalt demand. And so that is quite significant. So one of the things that you and I have been talking about over the years is that, is it even possible for the United States to create an alternate parallel supply chain independent of the Chinese? I got to be honest with you, there are some indications that pieces of this are starting to come together. But let me outline first the problem here. And I think the best person to explain the challenge that the U.S. is up against is Jose Fernandez, who is the U.S. Undersecretary of State in charge of energy and economic affairs. And last year, he was speaking with the Center for Strategic and International Studies and in Washington, D.C., and he made the case for what the issue is. And Geraud, I'm going to want to get you to explain, again, how these deals fit into what Jose Fernandez
We've got a problem. The problem is, for us to reach our clean energy future, we're going to need 42 times, that's 42 times the amount of lithium that we use today. Start from that premise. Critical minerals writ large, you will need anywhere from 3 to 6 times the amount of critical minerals that we use today if we are going to be able to to reach our goals. 60%, 70% of critical minerals is mined in or by China. 70 to 80% of the processing is done in the PRC. And that's a vulnerability. It's a vulnerability not necessarily because it's China. It's a vulnerability because COVID has shown us that we cannot depend on a single source for anything. Right. So what have we done? And I'm very proud of what the State Department has been able to do on this. We have early on we talked to the Japanese, to the Koreans, and to many others, and they were worried about the same thing. And so we have put together a partnership that we have called the Critical Minerals Partnership. We announced it back in June, and it's 12 countries. There will soon be a 13th, but I can't disclose it yet. Where we've gotten together, and we're going to do a number of things. Number one, we are going to share information on a timely basis. We don't want to know about a transaction that closed. We want to know about a transaction that's possible. So we're going to share information among all of us. We will share financing opportunity. We will engage our private sector, again, our competitive advantage. We are going to start working. It's early days, but we're going to start working on recycling. There are people out there who will tell you that in a few years, 20% of the electric vehicle batteries will be from recycled materials. We've got to start working on the technology. And lastly, and we stress this, our calling card will not be a race to the bottom. A lot of mining projects today are environmentally unsound, are not supported by communities, do not bring benefits to the people in whose communities the mines exist. We are going to stress, and our calling card will be the highest ESG principles out there. There is no reason why a Zambia needs to accept low environmental standards, low governance standards, corruption in order to get investment. We will insist that a U.S. company that goes to Zambia, to use that example, follow U.S. standards. And if we do that, then we believe that we will be able to move the needle, make a dent on that vulnerability that we have today.
Okay, so it wasn't by accident that he mentioned Zambia, and Zambia, of course, is the location where a huge copper, potentially also having some cobalt, was found by an American company backed by Jeff Bezos and also Bill Gates, that potentially could be a game changer. Again, this is all in the future, but Geraud, You heard the disses there. Again, he's saying it's not about China, but we know it's only about China. But give me your reaction to where Jose Fernandez is coming from. I think he makes a good point that it's a bad idea to be dependent on any single country for something as important as this.
Totally.
That being said, everybody in the United States is pretty much in agreement that they hate China. And so they don't want to be dependent on the Chinese for something as important as these metals that go into a lot of electronics. But talk about the problem that Jose Fernandez laid out.
He's really mentioning something really quite important. Beyond the US or any Western country problem, it's also an industrial problem in a sense where a whole industry cannot be depending on one single country or two major countries when it comes to producing the main element of its industry. In this case, in terms of cobalt, we talk about nickel, manganese, cobalt batteries that are used for EV batteries, those kind of where you use cobalt. You cannot be depending solely on DRC, for example, in terms of production, where you have 68 to 70% of the world's production per year. You cannot be depending on China, where you have almost 80% in terms of refining of cobalt of the world. So when you put that in context, you realize that beyond the geopolitical issue, the industrial problem is quite real. The risk is real, where people are kind of worried about the disruption that may happen if something comes to happen either in DRC or in China. That being said, now when you add up now the geopolitical element of it, when you have the US and the Western country, EU, depending on cobalt as well for EV batteries, but also for their own industry, all the application, you realize how vulnerable they are. So you kind of put yourself in a position where I cannot be walking in that direction. When they were all friends, globalization, we are all friends, all integration, economic integration, that was fine. But now we enter into that area of geopolitical tension, trade tension, and everything. They first realize that they are very much vulnerable to China. Thus, the willingness now to develop their own alternative supply chain of cobalt and other critical minerals that are China free. That's why they put in place the Mineral Security Partnership. Now, from when they created that in June 2022, they included many countries, Japan, certain European countries, Australia, Canada, and everything. It's a global strategy where they say how we can work together into getting to that place where we can have our own supply chain. And mind you, beside that, the US also went the Inflation Reduction Act, where you have a huge portion put in place for only securities like guaranteeing the supply of critical minerals. So you have the whole strategy put in place by the US on how to get to where they want to get now. So now the question is how they want to get there. That's why now they're targeting countries like the DRC and Zambia when it comes to copper and cobalt, because those two countries are major producer of cobalt and copper in the world. So now the US has been putting in place different initiative and everything, and you have the cobalt company coming into Zambia where they're now trying to find their own perspective. So this is basically where I'm putting the general context or where Jose Fernandez is coming from.
So we see the desire by G7 countries to, because again, it's not just the West, it's also the South Koreans, the Japanese that have huge auto industries that also need this. So I think it's important we break this apart from being a Western versus China thing, because this is very much a G7 versus China thing. And so
even though we can nuance even there, we can even have some nuance there. Especially when you look at the trade relationship between South Korea and China when it comes to those critical minerals. South Korea is one of the top countries that has been receiving massive China influx when it comes to lithium processing in South Korea. So there is a kind of
we do need to point out the fact that at the political level is very different than at the corporate level.
Exactly.
Companies like Ford and Tesla have deals with Zhejiang Huayo Cobalt and other Chinese processing companies. They also rely on CATL for batteries. So there's a lot of mixing up in here. But at the political level, like what you've talked about, there is these blocks that are forming between China and some of the G7 countries in that respect. And for the purposes of our discussion, we can use that today. And we're starting to see what the outlines look like of this parallel supply chain that they want to develop.
Yeah.
Again, there are still questions whether they can do it. However, Geraud, there is a huge problem that they're coming up against, and it's these incredibly low prices. And this is what I want to talk to today. So again, we've built up all the way in our discussion to get to this question of the low prices. And this came up earlier this week when I wrote a column on CGSP that started to look at what's going on with these low prices, because the behavior of some of the Chinese mining companies in the key battery metals, that is cobalt, nickel, and lithium. There are about 50 minerals and metals that make up the majority of an EV battery, but those three are the big ones. Some of the behavior does not correspond to market prices. Now, let me just kind of walk you through. You talked about this at the beginning, but let me show everybody what the charts look like here. And boy, it is ugly, okay? The pricing of these batteries, again, for producers and for countries and for miners is ugly. For consumers, this is great news, right?
Exactly,
I mean, this is going to bring down the price of battery metals. Here's the price of cobalt. We're looking at reductions in the price of cobalt somewhere around 80% since 2022 there. And you can see that is just a straight line down. It is not much different when we look at nickel. Again, peaking in the 2021 here, and in those two or 3 years, again, down about 80%. Okay, these prices, I mean, they really skyrocketed. And back then in the early days in 21, 22, there was a lot of concern that we were going to be short of these metals. And so that pushed the prices up. And now we don't have that issue. And let me just show you what we're looking at in lithium as well. There's been a slight recovery in lithium. But when you look at those prices in 22, boy, straight down. There we go. And then not only straight down, this is very interesting, from December, just flat, not moving anywhere. Okay.
Exactly.
So that then begs the question, and this is what I really want to get your take on. What the F are the Chinese companies doing? Because when you've got prices that are that low, the natural instinct at that point is to pull supply off the market, okay, in order to start driving demand up a little bit. That's not happening here. As you talked about in the very beginning of our discussion, and we can talk about what's going on in the DRC, and then next I want to bring Antonia in to talk about what's going on in Indonesia with nickel. But in the DRC last year, we saw a massive surge of production by CMOC, which is one of the big mining companies, and they in fact produced so much that they overtook Glencore as the largest cobalt producer in the DRC. What the Chinese are doing, what CMOC and other mining companies, doesn't make sense from a business perspective. What is your insight as to what you think they're doing?
Two things to keep in mind. Last year, around June, July, it's been reported that the Chinese government had a meeting with different Chinese mining companies talking about how to stockpile cobalt. So they took advantage of that. It was really a meeting where they agreed on the quantity of cobalt they needed to stockpile for the country. So that meeting really happened. And it was really interesting to see since then how Chinese companies have been stockpiling cobalt since 2022, 2023, and really taking advantage of the low price, because low price means that they can really buy cobalt on a very low price, very cheap. One thing. Second thing to keep in mind is the fact that the low price of cobalt also rose the cost of entry into the market for many non-Chinese competitors, because we talk about that, how the US is trying and other G7 countries are trying to come into the market. So when the prices are going low of those minerals, what's happened? Private companies, non-Chinese private companies, are having a hard time to find capitals to invest in those projects, which leads to every operation that you do have on the ground kind of like don't find funding anymore. You kind of slow down your operation. This is the one element. The other element related to how it's impacting current operations, also the fact that current operation are seeing the operation they have to be cut down, like shutting down operation. Australian company has to shut down lithium processing, nickel and everything, where they had really, because it was not making money anymore. So when you have that in perspective, you realize that you have in a country, you are now finding yourself in a context where China is trying to take advantage of that. Another third point that's happened because of low prices. still last year, China took advantage of the fact that because of the change of prices, they changed the way cobalt is bought usually in China. They start, instead of using hydroxide cobalt as the reference prices, they started to use sulfate cobalt, which is much more lower, to allow them to control the price on the market. So they took advantage of all those elements to allow them to get much more of it. But the fourth element I want to mention here that's really much more interesting to look into is the fact that because of that, now there are so many vulnerable Western companies out there that are just easy and open for acquisition and merger. And two major companies have expressed that. China Molybdenum in his annual report in 2023 has clearly reported that CMOC, yes, they say, we are now, because of the price, we are now much more open into merger and an acquisition of different operations in the world. They say that in Indaba early this year in February, they also reported it a few weeks back in their report. Dijin, another Chinese company, Dijin Mining, also expressed that, is even announced that is in talk of acquiring a huge major lithium operation in the world without giving much more details. So because of those low prices, many non-Chinese operations are becoming so vulnerable for the tech. And you'd believe that companies will be like, because of the geopolitical tension, we won't be interested of Chinese money. This is where you're wrong, because this is where you have a company like a Canadian First Quantum going to China, talking to the Chinese government and talking about how they can raise funds together, or even where Jiangxi Copper can be part of the deal to acquire new mining company, to acquire much more operation in First Quantum. This is the context where you see the Chinese are really taking advantage of the market to acquire now new projects and to really increase their share of the critical minerals in the critical minerals markets.
Okay, so I want to now extend our conversation beyond what's going on in Africa, which is what Geraud has been talking about, to the situation in Indonesia, where we are seeing a similar dynamic where nickel production is increasing, again, counter-cyclical. Antonia is our Southeast Asia editor. She's been following this as well. Antonia, a lot of what you've been hearing from Geraud about cobalt in the Congo should sound rather familiar to what you're following with regards to nickel in Indonesia.
Yeah, that's right, Eric. Like Geraud had mentioned before, we are seeing a lot of nickel gluts and a lot of nickel oversupply from Indonesia. But I think I'm seeing something a little bit different than the other places that you guys have mentioned before. So over here, we are seeing that some nickel projects that were planned before are being scrapped, even those with Chinese investors. So I think Geraud mentioned that many Chinese companies are moving counterintuitively, right, by continuing to produce. But in Indonesia with nickel, I'm seeing more Chinese companies being more cautious. So there's this.
These are the smaller ones, right? Or are these the big ones?
I think these are the big ones.
Oh, so the big ones are being cautious. Okay.
This one project by Njenga Hakeenah Cobalt, which is being cancelled because the company says that they feel that the oversupply is here to stay, basically. And then also, as I was reading up on the topic yesterday, I saw that there are reports, although I'm not sure if this is already confirmed by the company yet, that a project from Huayo is currently put on hold. And so the Chinese companies are being a little bit more cautious, but interestingly, it's the Indonesians that are still optimistic. So when you listen to how Indonesian companies talk, how Indonesian government talks, they still believe that they still hold on to this belief and these forecasts that nickel will still be on high demand in the future, mostly driven by electric vehicles. So some of these Indonesian investors and Indonesian state-owned companies, even, they are buying up nickel shares. So some Indonesian companies, they're still expanding, they're still acquiring mines. There's this state-owned Indonesian company that is definitely on the more optimistic side. It's called Mine ID, which is actually just acquired this big nickel company called Vale Indonesia, and they're saying that they decided to go ahead with the acquisition because they believe that the price will not stay this low forever. So they have a much longer term vision, I think. So yeah, you have a mix of behavior, but generally in Indonesia, if you look at what the companies are saying and what the government is saying, they will say that they will still hold on to this belief that yeah, nickel will be still in high demand and it will be sustained.
Some of your reporting lately has talked about two bigger problems. So price is one problem, okay, but there's actually two bigger problems that are out there facing nickel producers in Indonesia. Number one is the Inflation Reduction Act that we've talked about, how that cannot have any Chinese input into the supply chain if it wants to qualify, if a company wants to qualify for the $7,500 tax credit. Now, some companies like Tesla have said, we're a premium product, $7,500 isn't necessarily going to be a deal breaker, so they're not as concerned about some of the sanctions in the IRA. The other issue that you've written about lately, Antonia, that it'd be interesting to get you to comment on, is this question of maybe nickel is not going to be as popular in future batteries that are going to be sodium ion, that are going to be nickel-free batteries. And we're starting to see the Chinese move beyond nickel in their battery production. And so there may be a glut of nickel in the future just because people aren't going to use it as much.
Eric, allow me just to add up on something,
Mm.
just to really give it a bit of a context, because since we're talking about nickel and the IRA, interesting fact, when it comes to the IRA, in December, the State Department, the Treasury had to define what they have the concept like foreign entity of concern, which at the beginning of the IRA inception was meant to be all Chinese company. What they've done, and it's because they've done it because of Indonesia, because a lot of companies kind of expressed the idea that if we do that, it's going to impact our operation in Indonesia. They redefined the foreign entity of concern by saying all those companies, only those who are related to the Chinese states, but not Chinese private companies. They left Chinese private entities out of foreign entity of concern to allow them, to give them the leeway to keep on buying nickel from Chinese operation in Indonesia. That's quite just something I wanted the people to know, just to kind of show you how even in the IRA, the US kind of cautious to see that we cannot cut ourselves 100% if we put all Chinese company in the same box.
That's right. Yeah, I mean, I think even when we're not even talking about the IRA, I have a lot of things to say about our nickel developments and electric vehicles development. As you know, Eric, I've written a lot about that. I mean, even the gearing towards electric vehicles development itself has a lot of problems to me. There's still a lot of question marks there, because the fact is that 70% of our nickel is actually absorbed by stainless steel industry. So I don't really understand why we are sort of like forcing ourselves to place all of our hopes and dreams and aspirations to electric vehicles. There's a lot of things that we can do with nickel. So I think if we just have a much clearer, smarter end goals, other than electric vehicles, clearer roadmaps, we won't be caught off guard like now with the oversupply, for example. We would have built the industries that we needed to take our nickel and not let the oversupply to happen. So, yeah.
Okay, so also this week, very quickly before we let you go, Antonia, your upcoming president, your future President-elect Prabowo Subianto, was in Beijing this week, meeting with President Xi, his first overseas visit as president-elect. He later went on to Japan as well. We're gearing up for the new administration to take power. I think it's later this year. Is that correct? When they will take office?
So Prabowo will officially take office in October, I believe, when he gets sworn
in October.
Yes.
Everybody's been talking about that there's not going to be a lot of change, or they're not expecting a lot of change from President Jokowi to President Prabowo. What are you hearing right now? And do you think that anything will impact the mining sector and these nickel prices that we've talked about?
The thing is, when I talk to people over here, whether it's researchers or academics, industry players, even, nobody really knows for sure what Prabowo will do. Everybody is, right now, everybody's in Indonesia. If you ask them, they will say that yes, Prabowo will continue Jokowi's policies simply because that's what Prabowo has said throughout his campaign, and we just don't have any other clues as to what he might actually do in reality once he gets the office, right? Some analysts, some people who know Prabowo more have said that Prabowo is a very unpredictable character. So yeah, he can just do anything once he gets into power. He can just like suddenly turn around and do the opposite what he has said all this time. So
Okay.
yeah.
So, but we're not expecting a lot of change, though, right?
Um, right now, we are not expecting a lot of change in terms of mining simply because there's already too much Chinese presence in our nickel processing industry. And so any kind of sudden change would be very devastating for the Indonesian economy. So so people are not expecting Prabowo to go that far. So yeah.
Okay.
And
Okay,
Eric,
Antonia, thank you. Oh, yeah. Go ahead
just
very
one
quickly
thing,
before we let
just
Antonia go.
just one thing, just to jump on what Antonia said. It's really it's a remark that really that's available for many producing countries in the global south. Most producing countries in the global south do not have a comprehensive political strategy when it comes to their own critical minerals. They define critical minerals based on the demand that's coming from G7 and other Western countries or even China. It's critical just because the EV industry wants it. It's critical just because the military industry wants it. But when you say when you remove those external factors themselves, they don't have a comprehensive strategy to say, why do we believe that nickel, cobalt, lithium, or anything are critical for our own economy? And that's why
Why is that? Why don't they have a plan?
This is the problem. This is the question I've been raising with so many of them. The lack of industrial policy in a way that how do we define critical for ourselves? Let's say today there's no EV anymore. Let's say today the demand of EV drops. What's the value of nickel for ourselves? What's the value of cobalt and lithium for ourselves? Most of those producing countries, they do not have those policy. They define those critical minerals based on the fact that yes, China is saying it's important. The US says that it's critical for the defense industry. Europe says it's critical for the defense industry. But when you remove them, why is it important for you? That's the problem. At the end, we're depending much more on the demand side from outside.
And Tony, what do you think?
Yeah. I mean, yeah. I mean, I totally agree with Geraud. There's no long-term planning. This is something that we as Indonesians have been complaining also about to our government. Like, how come there's no long-term planning for anything? We build too many smelters that produce nickel products that are halfway processed, basically. So in the beginning of 2020, I believe we thought we would have around only 30 smelters by 2024, but now we already have over 100 smelters. So really, there's no check, there's no plan, whether it's for stainless steel or for batteries. You need to have a good plan, because once you produce this nickel, the nickel needs to go somewhere, right, to be further processed. And Indonesia doesn't have those industries built yet before they build the smelters, because it's just much more complicated and much more expensive to build these industries. So right now, nobody is there to absorb all of these nickels that we have produced domestically. And so what we do now, we send them abroad, mostly to China. And so as you can see, we are very, very dependent on demand and on economy in China.
Yeah.
So yeah.
This is the same comment that China and Zhejiang Huayu has been doing in Zimbabwe by saying, you're asking us to process lithium in Zimbabwe to halfway, but there's no market. At the end, we're going to have to send it back to China to absorb those elements. Yeah.
Yeah, they're doing the initial processing there. Yeah. And Indonesia, again, is moving faster than most countries to try and move up the value chain. And so it seems like to the outsiders, Antonia, that there is more of a plan in Indonesia than there is in other countries. But I think to your point, it's more complex than that. Antonia, thank you so much for all of that and your great reporting. Again, if you want to follow what Antonia is doing, go over to our website. She's also commissioned us just some fantastic reporting that we've done on iron, and she did a documentary on quartz. So we're not looking at just nickel. We're also looking at some great reporting in other minerals as well. Thank you, Antonia. We will see you.
Eric and
Okay, we'll see you later. Okay, let's wrap this conversation up. And I want to bring us home now to where my thinking is and what this all is. And I want to get your take on it. I wrote about this on the site. I'd like to share it with our YouTube audience who doesn't necessarily subscribe to us. But I think the moment that we're in right now, and again, there's a lot of nuance and complexity, as Antonia pointed out, that it's not only the Chinese that are contributing to the problem of low prices, the Indonesian state as well, but the Chinese see a moment, in my view, to take advantage of these low prices by virtue of the fact that they are incentivized by different priorities than the Western and G7 countries are. So Chinese mining companies can look out 10, 20, 30 years because many of them, not all of them, but many of them are state-backed, receive subsidies, and have a longer-term view. And you and I have spoken with Chinese mining stakeholders who have said that they view these critical minerals in the context of national security.
Security, yeah.
Very different. Now, the problem is with these, all of the things that Jose Fernandez talked about. Now, remember, Jose Fernandez's comments were in 2023. Prices were still low, but they weren't continually low as they are today.
Yeah.
All of these dreams and fantasies that the G7 countries have to build a parallel critical mineral supply chain are in jeopardy now with prices at 80% below what they were just a couple of years ago, because unlike the Chinese, who these companies do not have access to state-backed financing, they do not have access to risk insurance services like what Sinosure provides. And so now you're asking private investors to buy into a market which is only 20% of the value that it was a few years ago. And I don't think they're going to do it.
Exactly.
So
this is the problem.
I think we're going to wake up in 10 years. And I think this is going to be a controversial statement for a lot of folks in the US. And the Chinese are going to, tighten their grip on these critical supplies and critical minerals rather than have more diversification, because they are moving today much faster than what we're seeing from G7 countries. That's definitely my take right now. Well, let me hear what you have to say about this.
No, definitely. I'm sharing your point of view on that. I'm completely 100% on that wavelength by saying that, when you look at the strategic element of it, and this is even lead me to the place where I've been questioning myself. Do liberal democracy with so many stakeholders in the decision-making process are structurally equipped to challenge a country where decision-making happens in center and it happens fast and it can really think of over the long term? Because let's face it, lawmakers in the US, they can plan for the next 4 years based on the, based on the terms and everything. In China, the CCP can allow itself to say, let me think 15 years. Because, for example, when you talk about China dominance in the DRC, it did not start with Xi Jinping. It started in 2000 when he was not even there.
Remember, the deal of the century was done in 2006 and 8 with, back then. And also, we got to take with a grain of salt whatever Jose Fernandez says he wants to do. When he says we want to hear about deals, we have seen over and over again that Ford doesn't give a crap what Jose Fernandez has to say.
Exactly.
And that Tesla neither. And by the way, LG Chem in South Korea, they're in bed with the Chinese. And your data shows in the DRC that all of these companies are intermingled with one another. Exactly. And so, again, we have to put that into the context that the Americans and the Europeans and even the Japanese do not speak on behalf of their private industries.
Exactly.
So and now here's the resistance that you face in Washington. They say, we're not set up like the Chinese state is. We cannot bring together state-backed financing. We can't bring together state enterprises. We can't bring together all of the different resources that the Chinese have. And they will say that
you cannot play the game. You cannot play the
game. They kind of say it in a defeatist way. Like, we'd love to, but we can't.
You can't play the game.
But so I agree with you. I don't think if you don't have those resources, you can do it. Netflix, by the way, right now has something like a 10-part documentary series on the Cold War. And it is absolutely amazing. It's on nuclear weapons in the Cold War. And as I'm watching this, what you saw back in the 50s was how the American government completely reinvented itself to take on the Soviet challenge. It built new agencies. It built new architecture for its buildings. For example, the State Department is a building that was designed to confront the Soviets. It was compartmentalized to protect secrets. The way that they rotate diplomats to this day is built around confronting the Soviets. And one of the things that is remarkable to me when watching this documentary series is that we were able in a previous era to reinvent ourselves to compete with a peer rival. And yet what we hear in Washington today is, well, sorry, we can't do that. And my attitude on that is there's no crying in baseball. I mean, there's no crying in baseball. Either you're going to compete or you're not. And so let's go back to your and my favorite topic of the day, 2022. Yes, 2022, the United States famously brought together the presidents of Zambia and the DRC to sign a mineral supply chain MOU.
Yeah.
That never got done. And one of the things you and I heard was it didn't get done, not because the Americans didn't try, but because they weren't able to wrangle the Zambians and the Congolese to get together. Exactly. Whatever it is, they weren't able to get it done.
Yeah.
And I think it proves the challenge that they're up against to try and build this alternate supply chain. So while we may have some progress, as we talked about at the beginning of the show, these low prices and the ambitions that the Americans have to create ESG standards that are world-class, I think is going to run into big problems in places like Zambia, Indonesia, Bolivia, Chile, and the Congo.
And especially if they do not commit on state building process. Why am I talking about state building process? Because all the issue that Jose Fernandez has mentioned, that we are not doing, we are not running with low standard and everything. It's those issues of governance are structural issues that stem from how those countries are governed. And their solutions are not just like in the mining sector. The solution are structural solution in terms of state building, good governance, and everything. If they do not commit onto pushing those agenda, on working long term to create the condition in countries like the DRC, the Zambia, the Bolivia, and everything in Indonesia to have those, to attract the US investment, they will still find themselves in a position where the private sector will tell them, you know, I'm not ready to go and have my reputation tarnished because I'm doing operation in a corrupt and stable country. I'm not ready to do that. So this is the problem they have to face. And this is, I think, one of the main issues. They're going to have to find a way to incentivize the private sector, which so far seems to be deaf to the request, because as I've mentioned earlier, you have Canadian companies in the midst of all of this geopolitical tension, debate, and low prices. You have First Quantum, a Canadian company, going to China, talking to the Chinese government and say, hey guys, do you want to buy us? Do you want to buy some operation I have in Zambia? Do you want to put money on the table? That tells you a lot.
Yeah, it does. Okay, so we started the show talking about EVs and the slowdown in demand in China despite the SU7. By the way, just so if you're following this story, it's not the SU7. Okay, this is I was
also saying the same SU7.
It's not the SU7, it's the SU7. And so a lot of Chinese commentators have been kind of giggling at the West and the outside, saying it's not SU, it's SU7. And when you listen to the Chinese, they say SU7. So just so you know, so the SU7 is getting a lot of excitement. But China is by far the most dynamic and exciting EV market in the world, but it is by no means the only one. And when we look at what Chinese are doing with EVs, and this may actually turn around some of the battery demand issues, because if battery demand is slowing in the global north, it may actually end up picking up a lot in the global south. And one of the things that you and I, Geraud, cover quite closely is the spread of Chinese battery technology, EVs, and EV production now in Asia, Latin America, Africa, the Middle East. It is incredible to watch what BYD is doing. And if you're not following BYD, you need to. But BYD is by no means alone. And for that, I want to welcome to our discussion Njenga Hakeenah. And Njenga, he recently had the chance to go and experience a different kind of Chinese EV in Nairobi, Kenya. And so here we have the Wuling that's there. So Njenga, tell us about what you were driving there and what the story is going on in Nairobi.
Well, so that's the Netta V. I have heard you talk about 2.7. That's the Netta V, and it is an across SUV. It is one of the many cars that they are stocking from China. And this one is top of the range, for the market here, going by the prices that they are giving. And so having to drive or having driven that and having a feel of what it is one of those cars whereby anyone who gets into it, they just don't want to stop driving. The most disorienting.
Okay, I mean, and here's the part that blew me away. How much does that car cost?
So this one is going for 11 million shillings. That's
okay. How much is that in dollars?
That's about $38,000. But then they have another two SUVs. There is Avatar, and then
that's $38,000.
Yeah. So
that does not look like it. I mean, Geraud, isn't that funny? The SU7 is between 30 and 40,000.
No, the SU7 is cheaper than this one. The SU7 is 30,000. I even remember some commentators in Europe, they were worried by saying if the SU7 comes to Europe, we are all out of business because it's too cheap and it's really fancy more than that. So this one, I would have expected that to be something around.
I thought it was going to be a lot cheaper, Njenga.
Something like that.
Way cheaper. I mean, who's going to buy that in Nairobi for that much money?
Yeah, so I think it's the sales pitch, they give you a price and then you negotiate, because in Kenya you negotiate. So anyway, but I actually thought that even for the others that they had, which were smaller, the prices were a bit high, and I felt that probably they would not or they would experience challenges getting these off their shops. Because for a small car going for 2-3 million shillings, or that is like 20,000, that's quite substantial. And the smaller ones are especially targeted at deliveries, at cab businesses and all that. And so looking at the competition that they have to deal with in terms of fossil fuel cars, they would have to probably reconsider and rethink the prices.
So the idea here is with this Netta car is that they're bringing over Chinese technology, but they're also customizing it specifically for the East African market. And to be sure, they're not just selling this in Kenya, but they're also selling it in Uganda and I think Tanzania as well. So they want to sell these all over, and Rwanda as well. And so throughout East Africa. What do you think the market is, and what did they talk to you about some of the customizations that they're making specifically for East Africa?
So some of the customizations are what would be expected of the transport authorities in Kenya and the various different countries. For instance, the clearance, it has to be some way. And also for the safety features, they have to be some way. But then there are customizations that are, like left-hand, right-hand drive. For Kenya, we drive on the right, but we also have left-hand drive.
And a lot of people around the world drive on the right. So that's not
unique.
But what other, there were some
a minority. We'll not go to that debate.
Yeah, well, but there were some other customizations that they were making specifically for Kenya.
Yes. So in addition to this, like if a client wants leather seats, or to have a different kind of tablet over there, those are the customizations. Because some will come and say, I don't want that, I want this, I want it to look this way. So there are those, and color as well. So those are client kind of desires and what they want. But generally, the others that are really matter in terms of like right-hand drive, those are because of where we are at, and the clearance and all that. So
they do not integrate. They do not integrate, for example, a GPS only for Kenyan, or because one of the issue that when it comes to those electronic cars, the fact that many of them do not integrate maps from certain countries because they're not as much developed. I was wondering, since this one has a tablet and everything, I'd assume it also says GPS service. They now maybe integrated a much more accurate GPS service that fits to Kenya and everything, to Nairobi streets, and to be much more accurate to the market, right?
Yep. Interestingly, what we have seen with the other imports, especially because we have a lot of vehicles from Japan in here, all of them come in Japanese. And so you have to either pay or do something extra for you to have it in a language that you can understand. But these come in a language that is understandable, including the mapping system, whereby instead of having to have a Japanese or Chinese speaking to you and telling you turn right or left and you don't
Does it come in Swahili though?
Not yet at that point. But I think they will be working towards that, because actually East Africa, Swahili is the language, you know.
So part of the strategy here, guys, is that they want there's a strategy to make what they call BYD inside, based on Intel inside. So you're going to start seeing Chinese technology. Huawei, this is apparently their strategy. Huawei is not building their own car. They're building their car in partnership with a number of different brands. And so we're going to start seeing a lot more in places like East Africa and all across Africa and throughout the global South. Cars that have batteries that are faster to recharge. They're going to have much more dust and flood resistant than you would have in other parts of the world. They require fewer parts and even less maintenance than a normal EV does. And again, a price point, and this is why I was surprised about this price point, because previous Chinese EVs that we've looked at in Kenya have been down to $5,000 to $10,000. The Wuling in many parts of the world is about $10,000. So that is that's very interesting, and I think we're going to start to see more and more in Africa. The problem in most countries, and think about where you guys are, is the charging infrastructure.
Exactly.
And now that's going to be a big problem. I mean, you can charge at home, but you don't always have consistent power. Yesterday, Geraud, we tried to do a show.
Exactly.
And I was out of power for hours and hours and hours. And so if you have to go somewhere and you don't have power to charge your car, that's going to be a big problem.
And this is something that needs to integrate. This is definitely that will be one of the big issue when it comes to EV battery expansion and integration in Africa, the charging pole, because we already have that in many Western countries. Mind you, the European countries are much more developed than us. Now in Africa, you have major issues like this, and something that we're going to have to integrate. But despite that, you still see some now EV buses, Chinese EV buses taking place in the same countries, in Kenya, in Rwanda, in Tanzania, in Ethiopia as well. Basigo, exactly. That just tells you that somehow they still find the way to create, to find traction there. I think they're aiming for to be the first one in the market, and later on maybe to take the first loss, but later on to becoming the main players over the years.
Njenga, have you seen any charging stations in Nairobi? Are there any public charging stations? Do they exist?
So some companies, petrol stations actually, are incorporating the charging stations. For Total, which is shifting to renewable energy through solar, they are installing this. So they are running concurrently with, when you're fueling, you can also recharge your car. But in terms of reliability of power, you find that, like for Utu, what they are doing is they are working with car buyers at home where they are installing solar systems. And so you don't have to worry about, you don't have power on the grid, but you have a source at home.
Oh, that's cool. So you charge from your solar panels. So Utu's selling a solar package with a car, a solar recharging package.
They're not selling the solar package, but they are working with people who can be able to install that for you. And so it comes as a package. And also in terms of the pricing point, because you mentioned that, and I wanted to just make it a bit clear, is the taxation regime is very unfriendly in Kenya now.
Yes,
and
we've heard about that.
one of the points that I took from this conversation is that they are taking more vehicles to Rwanda than in Kenya because of that one problem. So you will find that a car will come at a certain price, and then the taxation will be almost like 80%. So that could be one of the
this
reasons.
is the same problem, guys, as the used clothing dilemma.
Exactly.
Is that flooded with used clothes from all over the world that undermines local industries and now in this case clean technologies. And so we have dirty old cars that are coming in cheaper because they're taxed less than new EVs. So that's and now we have the AFCFTA. So a lot of these things can move across borders pretty easily. Geraud, are you seeing charging stations in Mauritius?
Not as much though.
Have you seen any? Have you seen any?
I haven't seen any though. I haven't seen any. Have
you seen any Teslas, by the way? I mean,
no Tesla, but I see a lot of EV. I see a lot of hybrid and a lot of EV cars. That's true. In terms of EV cars, I see quite a lot. Most of the Uber taxi service I use here, they're EV cars. People like EVs, hybrid and EV cars.
And what are they driving? Do you know? Are they BYDs or what are they?
No, they're driving like the one I've seen. I've to check. I've Toyota EVs. I've seen
Renault's probably.
Yes, Renault French. I've seen Aval, of course. Aval also. But I'm gonna be paying attention to those brands. But the thing is, here in Mauritius, the reality is so electricity is quite stable. It's quite stable. So I think that people can charge the cars from home. So that's why we don't see a lot of EVs on the street. It's starting to get traction, but not as much as you'd expect them to happen. But Mauritius is tax friendly compared to other countries in Africa. It's way much tax friendly. So we can expect that to expand also on the island here.
We're going to have a story on our site next week by Njenga about these EVs that are coming in and then these Wulings and sold by Utu and the whole business model. So if you want to see that, you definitely want to go and check that out over on our site. And you can see all of the great work that Njenga is doing. By the way, there's a whole section on the bottom there called China, Africa Climate News. And so that is all written by Njenga. And also, if you are a journalist, a climate reporter, we have some commissions that we have money. We want to engage climate journalists in Africa. You have to be living on the continent and you have to be from Africa in order to qualify for these reporting commissions. But we'll post a link on, let's see, on social media on our website this week for more details about that. And you can email me, Eric, at ChinaGlobalSouth.com if you've got questions, and I'll pass everything on to Njenga. Njenga, thank you so much for your great reporting on this, and we're looking forward to seeing your story next week.
All right. Thank you, guys, and do have a wonderful weekend.
Thanks so much. Okay, Geraud, that is quite a whirlwind where we started in China. We went to the Indonesia and then also into the Congo and then ended in Kenya. Help us kind of bring everything together, what we've heard today.
It's we are moving in a place where, because of decarbonization, because of green technology, EV battery metals are going to become critical to the world development. And it's also going to be important for producing country. Producing country needs to come to a point where they need to put long-term policy, global policy, to take advantage into the situation. We've heard in the past how Jekamin chairman was complaining about the fact that maybe the DRC have missed the cobalt opportunities, and we are seeing now with the low prices that's happening. We're kind of wondering what's going to happen for countries like the DRC, the Indonesia, and the Chile that producing lithium. The problem is those policies needs to come in place to allow them to think long-term strategy, to avoid and to be able to develop tools that are going to allow them to avoid all the fallback when it comes to gluts, when it comes to oversupply of the market. We also see that China is moving into becoming a very powerful player into the market. They have no intention to back down. They have no intention to let them being played around. They're really taking advantage of those low prices to allow them to acquire new projects. And if people are listening from Washington, I'm telling them, in terms of strategy, so far, the move in the DRC in Zambia are quite, it seem safe. But if Chinese company decides also to start to build processing plants of cobalt in DRC and Zambia, you are pretty much sure you won't find any single cobalt product in the world that is China free anymore, because basically you're going to have all of them based in those spaces. So the country is now, in terms of like, how do we come to get in all that? We have the geopolitical tension of it. For me, we have to pass the geopolitical tension of it, because I do believe that climate change cannot be politicized, because this is a issue of climate change.
But it is politicized. I mean, there's just no two ways about it.
We should not be.
It should not be. But again, we have in the situation in the United States, half the country doesn't believe in climate change. So let's not pretend that everybody's in agreement on this.
Exactly.
The final thought that I'll give on this is that I just don't think the G7 countries are moving fast enough. This is a rapidly changing market. This is a market where the Chinese have an ability to be incredibly fast and adaptable to the changing conditions.
Exactly.
The number of deals that I'm seeing around the world at the scale of the deals is incredible. And also, we also have to keep in mind that all the talk from the Americans and the G7 countries about how the Chinese are purely focusing on extraction. When we look at what happened just this week alone, and Geraud pointed out this earlier in our discussion about a new processing facility that opened up in Zimbabwe this week.
Yeah.
There was news of a processing facility that's opening up in Morocco last week. That's on top of Prospect Lithium's already existing facility in Zimbabwe. This new facility, by the way, when it's up and running, will be able to do 300 tons. I think they said, I think it's 300 tons a year, but it's a lot that's going to be there. Now, again, this is not going to replace China in many respects, because they're going to do very low-end processing. But what it shows is there's a lot going on. I don't see the same pace of deals coming from Americans, Brits, Europeans, Canadians, and Japanese and South Koreans. You see a deal here, you see a deal there, but nowhere near the volume that's needed. Jose Fernandez at the beginning talked about what the U.S. is going to need in order to defend itself from being reliant on one country. We're not keeping pace with that need right now. And I think that's very important to keep in mind. And so, well, let's leave the conversation there, Geraud. This is always a lot of fun for you and I to have these conversations. I hope everybody had a chance to benefit from it. If you enjoyed what we're doing, we would love for you guys to support the work we're doing at the China Global South Project. It needs your support. Journalists like Antonia and Njenga and Geraud, you're not hearing these voices from the Global South in the international media. You don't get these perspectives anywhere else, but it doesn't come free. We are 100% agenda free. We are independent. We are funded by our subscribers and our supporters and our Patreon members. And so that's one of the reasons why this work is so important. We hope that you will consider a subscription. $19 a month is not a lot of money for a lot of people in London, in Brussels, in Japan, for the quality of information that we are putting forward that literally nobody.
I think it's 2 Starbucks in certain countries.
And in Zurich, it's only 1 Starbucks, by the way. So shocking. And I mean, and you see the kind of work that the team is doing and the perspectives that they're bringing, and it's absolutely essential. So we really appreciate all of your work. Geraud, we'll be back again next week with another episode of the CGSP Roundtable. Thank you for all of your insights, and we really appreciate it.
Bye-bye.
Okay. We'll be back again next week. Thanks everybody for watching, and click to subscribe and follow along. We really appreciate your support. See you next time.